And welcome to the Hawkeye evening session. This is Wednesday, September 23rd at 9:30 p.m. And let me get to the disclaimers and we'll get started. Trading the foreign exchange on margin carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before deciding to invest in foreign exchange, you should carefully consider your investment objective, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with the foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. This is a live trading room. It is for educational purposes only. No financial advice or recommendations will be provided. Any trade taken during this live session is not a recommendation or suggestion that you should also do the same. Past performance is not indicative of future results, and do not trade money you cannot afford to lose. Before trading live, always operate with a written trade plan that identifies the rules for entries, exits, targets, and risk management. Having said that, we'll go to the charts. And let me see, where is my... And we're going to share the screen, and I'm going to go to my charts here. And yeah, here we go. So what we have, we'll take a look at the Aussie US trade. That's the one that's currently in play right now. That's the last one that we had the alert on. And that one was at 7:15. Now keep in mind that as the daily market closes on the forward exchange, it doesn't really close. It never really closes during the week, but they take a break for about half an hour at 5 o'clock. And so from 5 o'clock until pretty much about 1 o'clock in the morning East Coast time, there's very little activity. And so I generally do not take trades during this period of time just because the volatility is so low. Once about the 1 o'clock, once about midnight East Coast time, it starts getting a little bit more volatile as the London session is starting to crank up. You're starting to get some earlier moves during the London session, which starts right around, you'll start seeing around 5, 6 o'clock in the morning in London time. So normally I don't take trades, but I'll try and show this how we would plan this one out if we had a little bit more volatility. But this one, it was a ascending wedge at 7:15, and there really wasn't anything ascending about it, to be perfectly honest with you. On the 15-minute chart, there's nothing over here that you can even draw it. Best thing we can do is just go straight across with our A here at the lowest point of the A, which is basically the low of yesterday's market close, being a couple hours ago, and we had the alert. And so it's really pretty much a flat line across. We had a little bit of a trend line coming down, so I just put my low, my high. This is pretty much a flat line here, and then the lower high. And this is about as best of wedge we can get. We do have a trend line that I was able to draw, trying to connect some points on the top. And actually, it's really more of a channel that we're really looking at. You can see this pretty much a straight shot down. I would hesitate to even call that a wedge, only the fact an alert was given for it. But it's really more of just a downward trending channel. If I take this this trend line, clone it, and bring it down to the bottom, and just sort of tuck it in, you'll see that here's a little bit of a hit here, but it's just pretty much ranging inside of the trend of this channel. You may be able to bring it up to maybe this low right here, tuck it in, and see if we can get maybe a little bit of a consolidation as it's starting to taper in a little bit in here. But right now, this is really the range that is breaking out of. We have our 62 moving average, which is right here on the top. And if you look at the range where that point is, if you look at from where the D, from the wedge alert, you're going to be looking at if it could break the D and close above it, you could enter the trade but you're only looking at, from the range, you're looking at basically 11 pips till you run into the 62 exponential moving average.
Now, is that the 562?
This is the the orange is always a 15-minute 62.
Okay.
Yep.
Okay.
So, I mean, if it does break and close above, you still could have some range there.
Okay.
Let me see, I have, oh, yeah, let me see if, do we have anybody that wants to talk, I guess, before we, as we,
Just the
no,
three of
so
us.
just the three of us. Okay, well, we'll just keep an eye on that. So, like I said, this one is, there really isn't, there's not much activity. Even when it broke the wedge here, when it actually broke, you're only looking at from 70 to 75 to, you're only looking at a 5-pip move, and you haven't really, from 7:15, which was about 2.5 hours ago, almost 2.5 hours ago, it really hasn't ranged more than about 5 or 6 pips. And so if you have a 1.5 pips spread, and you have, say it pip and a half going in, pip and a half going out, that's 3 pips on your spread. And you just don't really have enough range to take a trade to make it worth your while. And that's why and until you start getting a little bit more range, there's just no point in, unless you want to take it and just spend till the next several hours, till sometime after 1 o'clock, where you may start seeing a little bit more activity. And that's pretty much the general rule of thumb. I mean, there are sometimes you'll get some good activity, but not very often, not enough to spend the time sitting up waiting for the charts to happen for you. So that's what we have on the Aussie US right now. We had one for the CAD at 7 o'clock, the US CAD. We come and take a look at that. And that was at 7 o'clock. And again, it was the same type of situation where you get the alert from where the day closed and day opened. There's so little activity and so little range. This was an ascending wedge. So basically what I did was I just came back here and found 2 points that aligned with each other with the hit. And that was my ascending part. So I'm looking for an anchor, a hit, another hit before the wedge. And then I just try to top off the upper channel with some sort of a couple hits where I could maybe use this for a wedge inside here. It broke down, and actually, I mean, this one broke here. But again, we're still looking at the same situation where if you draw a vertical line over at 1 o'clock, which would be right about in here, you're really not gaining a lot of activity until we get to, let me see if I have this. I guess it doesn't show it on this one. It's just a time reference. This is my 1 o'clock. That's pretty much the new day start. So if you were to take this trade, you'd probably want to be getting in right on the break of this red candle here, the break and close of the wedge. The top of the wedge would be your stop area, pretty much to the stop. But I would like to keep it above, up here where this last above the red candle. Now, but that's going to give you almost an 18 pip stop. But you could have taken it there, and then the target would be, you're looking for your 7 pip target, which is pretty much right where where it is right now. Now this was, actually I took this off of this point right here, looking for it to, when it broke, but it never really did. I mean, it got us in there, but that was about it. It went against us a little bit, but this was probably more of the better area to have caught that on the break. We usually always go to a 5-minute chart to retune the wedge, try and get things as close as we can. And you have a dog barking in the background. I apologize for that. But really, this is like here where the alert. This would be where I would like to see it close below this before I were to take it short, which is pretty much where I got in. It did come back, and this is pretty much right where it broke the wedge. Came back in, it's testing the top of the bottom of the wedge, so it's still giving an okay move. It's still in our direction. The Canadian dollar is getting stronger. On the 5-minute chart, we have a 5-point spread on our RCS tool. And right now it's pretty much just hanging in there. And we do have a little bit of a trend line from this point up here to here's where we had the break. A little bit of almost a hit here, pretty close. If we measure this out from where the top of this pivot is, that's a 33.89 to 33.91. That's basically a 3-pip spread there. That's right about where our spread is. So I can use that as a marginal hit, but at least it maintains this trend line here.
Oh,
And here's a high, here's the lower high, here's the lower high. And so it's respecting the bottom of the wedge. It's also respecting this trend line. If we put our moving averages up, you can see where the moving averages on the 5-minute chart are all in line. Here's our 62 right up here. I'll tuck that in so we can see that on our 1-minute chart. And right now it's still kind of trending on down, and we're just looking for our 7 pips. The next major area where we'll be looking at since it broke this, that this would be the next area that I would like to see a target, and that's one reason why my target is pretty much right in line with this blue candle here, the bottom of the blue candle. This would be somewhat of a target zone right in here, where they have the wicks. If you come over here, you have a wick. You come over here, you hit another wick, and another wick, and then you come down, and you'll be looking at this would be the zone. This would be about as low as it got. So this gives us our range to take our profit, and we have our 7 pips. If it comes down there, we have our 7 pips. And let's see, is there a fib line anywhere close by there to help to confirm that? This on a 5-minute fib line. And you'll see you have a little bit of a zone between here and here. Here's our blue, here's our green, and we have some more right in between that area. Put on 2-minute. And
now when do you decide out to change that, like your fib lines to down to 5-minute or 2-minute?
generally, I just keep the 2-minute on the 1-minute chart. I keep the 5-minute on the 5-minute chart. The reason why I did that was just so we can, without having changed back and forth right now.
Okay.
But normally I keep the 5 on the 5-minute, 15 on the 15, and then the 2-minute, which is as low as it goes. And I do that on the 1-minute chart.
Mm-hmm.
I was just trying to show you that's pretty much how I do that. I mean, that's pretty routine. If I change it, it's only because I'm trying to show you the difference without having to go back and forth to the charts.
Okay.
That's the only reason why I did that. So right here are the 2-minute. I'm on the 1-minute chart. This should be my 2-minute fib. So I'm looking at the area of here's my blue, here's my green, and there's a red right in here. So if I were to draw, let me see here. Actually, I kind of did this today. I don't know if I'm going to show up on this one or not. If I were to draw this from the, let's see, where are we at here? Here's my green. Green to green. Let's see where we at here. See what I get. I go from the green line to the green line. This should be my 7 pip moves in between. So this is basically, kind of gives you an idea where these 7 pip ranges are a little bit better. I can make this into a reverse, where my supply zone would be on the bottom. If I can bring it up, let me see. Oh, wrong chart, wrong one here. Settings. I can reverse this, get to change the colors on that. So here's sort of like area of demand. Here's your area of supply. We're right in the middle of everything else. So right now I'd be looking at maybe coming on up, testing this blue line, falling back. You can see where between it came down this point here came down right about halfway between this zone, which is about 3.5 pips. And so it came down about 3.5 pips there, and now there's a good chance it could probably pop one up, retest this right here at the blue fib line, may even go up a halfway point, which is where this one did. You can see how these prices follow these prices, these Fibonacci prices. And so anyway, but again, with this time of day, I would still be waiting until the 1 o'clock hour before I took anything real serious on this trade. We've got a few more people showed up. Good. Any questions? Anybody in the room? If you have, if you like to put your microphone on, we'll turn it on, so you're free to ask questions. We have a small group here tonight, and so you can just ask some questions, and we'll maybe help to shed some light on this subject here. If not, we'll just keep on going, and unless we get some questions and some comments, then we'll probably go ahead and make this a short night tonight. Let me go through the replay on the Aussie US. This is the one we had earlier today. Let me see if I have this. It's the, excuse me, it was the New Zealand USD, I believe it was. New Zealand USD, and that was at 10:30 this morning. We had a New Zealand USD. And we just go through the replay on this one, and then that's for some other questions, so we may make this a short night tonight. We had the alert at 10:30, and it was a descending wedge. At least I think it was a descending wedge. Let me see here.
Yes, I believe so.
It was a descending wedge. There, you can see that we had a nice little drop just before we got the wedge alert. Well, by the time you had all the consolidation right here and you got the alert, most of this move was already over. But so in order to draw that, there wasn't anything here to really draw a wedge with. So the next best thing I could do, and this is, we don't usually do it this way, but it's the only alternative I had for this type of an alert, is to just basically identify a channel that this thing's going in. And it's just been going in a downward sloping channel, ranging between in this range, but decreasing each time. So as long as the price is staying inside this channel, we're looking at it to just either take it long up here, take it short up here, until we get the break of the channel somewhere along the way. And you can see where with these RSIs on the, this is on the 5-minute chart. I'm just keeping it on 5 minutes so I don't lose because of this replay. You can see where the price is all the way down, the strength is all the way down here, it hooks over. We have two whole moving averages right at the bottom of where this channel is. And you can actually see if I put the A all the way back here, if I put the C here, you can see where this is actually where the channel from this, all the activity was right in here, and we did get the break. So that is sort of giving us an idea that this thing's going to probably break to the downside, but we're now it did break to the downside, but we didn't get the alert until after that already happened. So this is an area of interest right at the bottom in this area right in here. So what I'm going to do is I'm going to make a mark on that, because this is really where the wedge broke. But unfortunately it was before we ever got the alert. But there is a little bit of a wedge right in here. If you draw this, it was descending. You can take it from this area. So let me just take this off here. I'm just going to redraw just from this little area right here. Forgetting that we're just going to assume that the wedge alert was actually right over here rather than at 10:30. Okay, so that's pretty much how I'm going to be looking at this. So we have a nice little descending, we have a nice little trend going from here to here. So we can identify that. We don't know if it's going to be a third hit or not, but we'll use that for a reference. So we have an anchor, we have a hit, nice pullback. If this thing comes back up to this area right here, which is also where 62 is, that would be a significant area where I would expect it to bounce off of this area if it comes up. But right now from this, you would be looking at, here's a high. This is trending high. It's a low, a lower high, lower low. And it wasn't until you get here to where it starts to flatten out a little bit. So I'm going to draw it from, because with a wedge, we really want to have a high, a low, a lower high, and a higher low. And this would be the higher low on this area, which would be right about to this candle right there. You see A, C, and then we have, and I'm just going to tag this right on up to the top here. We could move this one over to here if we wanted to. Here's our B, here's our lower high right here. Here's our low, here's our higher low, and then here, this one's starting to slope down. And this is really, this would be the candle that actually kind of broke the trend where you had a higher high here, but this is where, so this is now our new wedge. We had to break, but again, it was right before we ever got the alert. So we have to take that into consideration. There's really nothing over to the left of the chart until I think probably about August, sometime middle of August, before you ever got anything that was at this level. But we're going to take a look at that, and we're going to see if we can find a level to the left of the, here's where the price is. I believe it's right about here. And so we came right over here, and there's nothing, this big candle right over here. So this would be the target that we'd be looking for, right at this area, right at the bottom of the base of that big candle. This would be our target. This would be a target zone that we'd have, that I'd be looking at. If this thing does break to the bottom, that's really the first target that we're really looking at. And that's basically on a 4-hour chart. Is that for target one? And the reason why I say that is that if you look over here, you see a strong move up. This is a 4-hour candle, but this is the origin where it started. So we have this little area right here. Is if that price comes down, there's really nothing. There are, if you go to a lower time frame, you'll see some activity in here, but there, that is a very, very strong candle. And this is the origin of where that candle originated from. So we're going to mark this over here with the bottom of the wicks on that. And then we're going to make this our demand zone. Go back our 50 to our 5-minute chart.
You're going to make a demand zone between the two lines.
Between these two lines, yeah. I'm just going to, yeah, I'm just going to draw it. Yeah, I'm just going to draw this right like this. And we're going to make this our demand zone. And I can actually, I can slide it on over. It's going to be all the way to where those, that wick over wick was. So this would be the target area. This might be my first target area off of this move. And we can measure that to see if there's enough room to take the trade. And there's still 11 pips. If we can get a nice pull back up to the wedge, we have a 22 pip move availability in that. But right now it's already, we haven't even got the wedge alert yet. So we're going to press on to this and we're going to play this out. Here's a candle. So here is the alert. We had one little wick down coming down on the 5-minute chart. These are all 5-minute candles. And you see that all of our moving averages are in the right direction. We have the 62, the 13, and the 5. And we're going to see if this thing can come up and retest the bottom of this area right here. Even though this is where the alert came in, this was the close. This area right here was actually the low before, the lowest candle before the alert. And then, so this was the 15-minute candle that we're looking at, this red one right here. Excuse me.
Oh, bless him.
So I'm going to mark this area right here and just use that as a reference. And we'll see if this thing can come up and give us something here. We'll go to the next candle. And right now it's now we're starting to get a little bit of retraction back up to this area. We came up, tagged it, still below our 62. Make this orange one here, or this. Well, actually, we don't really need to because we're on this chart anyway. Forget that. For the next candle, so we have the tag of this trend line right here, even though let's say this was really this more of a significant area before the alert. This was the closest red candle that gave us pretty much a flat line from the A. We're taking that pretty much. So basically, this is the area that we're looking at. If it comes up, you should be retesting the wick. We have a nice strong trend line up here. If it breaks through the top of that, then we'd be looking to go long. And then the target would be up here where the B is. And we'll see what happens with this. Comes up, hits the target. Our RSIs are coming up. We have a nice little move up here on to the 89. Now if I can, let me see if I can go to 1 minute chart without losing everything. Yep, so far I can. Okay, good. So right now we're on the 1 minute chart. Everything's moving in the right direction. Everything's coming up to retest this area that we identified. And we're going to be seeing if our moving averages now are in the direction to go long. So you don't want to be so, and our RCS is showing that the New Zealand is strong. New Zealand's the first currency of the pair. So I don't want to be taking it short right yet, although we are looking at these are strong coming up to, and if we can get a hook up here somewhere within the bottom of this wedge, I'll make this one orange, because that's our main wedge that we're looking at. We may have a little trade to go short. Let's take a next candle. Came up, tagged it. Now we're back into the wedge. It pulled up into the wedge. It didn't close inside it. It just tagged it. So if we can get a nice little hook on this RSI, if we can get these moving averages to start flipping around in the other direction, we have the potential to take it short with a lot of range here from the bottom, which is low, to the high. This would be about 12. This would be a nice early entry to try and take it down to this direction. And so see where I have it. Nice. This is a little bit different because we didn't really draw the wedge to where normally we would take it right into where the wedge was, but there really wasn't anything here to be able to do that. You could maybe get a little bit here on a 1 minute chart, but that would be, you could draw a little wedge, but we draw them on the 15 minute and we tweak them on the 5 and the 1. But there's a little bit of a triangle here that you can see just before the alert. Here's the break, and this was 71 to 63, so that was about 8 pips. So if you did catch this right within 2 minutes after this thing got the alert, you could have gotten your 7 pips, so that would be about it. This is still the better play. We have the break coming down. We had test. I like to see these moving averages consolidate like they did right here. So this would be aggressive to take it off, move. This would be a very aggressive move. We did get the hook. You could take the trade off of this red candle, but I would say I prefer to see a break below the 62. You could have your trade set up for a buy stop to enter if it closes below this. I would say this would be an enter to close below this blue line.
I'm getting those.
And let's see, so next candle. Let's keep playing, and there it goes. Again, it's retesting the top of the wedge. We're still not in the trade yet because we want to see a close below that. And it really hasn't given us any reason to take it long because we want to be above this one here. Let's see. Yeah, because we're basically looking at that upper trend line is what we're looking at here. So this one was a really difficult one to try to draw out because of just the way the alert came in. Now you have a nice strong little move coming up. Still want to see it right now. If it comes up to here, we'll take it short. unless it breaks, and then we have to be looking where our other target's going to be, and then that would be more up to this area. I'd be looking at that for a target zone. This is not a real clean setup that we would normally be that we normally like, but it is something that we could you can do if you wanted to. It's there. It's just not as clean as it usually is. Go to the next candle. I'm still waiting for they close below this. As we got a new high here, I'd be looking to see as these moving averages cross over here. As I pull this out, we had the consolidation here that came up and just started following this yellow trend. Once we got the greens crossing over the yellow, if we can get the close below the, I'd like to see the close below this. I'm looking to see what body of the candle we can get. And I'd like to see a nice, this is a nice strong candle. I'd like to see it actually close below this before I would enter the trade with all the moving averages going in the right direction. There's the close below, and it's just about right in. You could probably take a, let's see where it was at over here. We got the close below all these little wicks here, and that's, so this would be aggressive. I'd still like to see it close below this candle right there. This would be a little bit earlier entry. There's the close, here's the enter. So your fill would be right about where that is. And so if you do a, so our entry would probably be just a little bit below that. Looking for 8 pip target, 8 pip stop, or 7 pip target, 7 pip stop. Here's our ultimate targets down here, but we could get 7 pips before it ever breaks down to the bottom, if it goes. Didn't quite make the target yet. It came down right to where our area that we were looking at for the break on the wedge. It's following the yellow 62. There's our target. Now we just made our pips. Comes back, retraces back up into to retest the moving average. This trade was be done. And you can just see that we have a nice we had the wedge, a little bit of a drop, pulled back, went right back into this other area where this big move came down and gave us an entry off the moving averages to make our target. So right now, this thing is actually in a sideways motion, sideways pattern for about the last, how many pips of this? Is 1 minute. So in this case, for the last hour and 15 minutes, it was basically been going sideways in a 15 pip range. Not a clean setup, but it is what it is.
Well, we had 2 alerts while you were explaining that.
Oh, okay. Well, let's take a look at that. U.S. CAD looks like in New Zealand. Let's do the New Zealand.
And you also had a New Zealand one, an
Okay, we're actually on New Zealand right now. So let's. This is a better time for New Zealand. So I'm going to stop this replay. Let's go to our 15-minute chart and let's see if we can do something live on this right now. So I'm just going to clear the chart. There are moving averages. I can see right now that the here's our day break. So this is the new day, and we're going to identify our alert. So that was at 10 o'clock.
Yes.
Yep, 10 o'clock. It was a descending wedge. So
ascending. Descending is on the CAD.
Oh, that's right, ascending. Thank you.
You're welcome.
So I'm going to put this at the 1 o'clock area. This is because I'm going to be looking, this is the area that I'm going to start looking for what we call the money zone after 1 o'clock. That's where the London session starts getting some more activity and more volatility. In this point right here, in this area right here, you don't get a lot. But it was an ascending wedge, so I'm going to be looking to see where the last pivot high, pivot low is, ascending. So we're going to be putting this at, there's our wedge alert right there, the yellow line, ascending. So I'm going to go with a triangle from here to here. There's our pivot low, pivot high, higher low, and a lower high. There's our triangle. Here's our alert. We could tuck this one in a little bit closer. It's still ascending. You can still see where the C is still higher than the A. We missed this little middle part, but that's okay. So here's our wedge. We're looking for a break at the bottom or break out of the top. If it breaks out of the top, I want to see a close above this point. And if it breaks out the bottom, I want to see a close. In this case, in fact, this is so narrow, I'd like to see it close below the A. If there's a little bit more room between the A and C, I would take it below the C. But like right here, you see the difference. At the D, you have a lot more room till we get to the slope on the B. So if it breaks here, you still have the opportunity to, this would be the first target that I'd be looking for a bounce, or I'd have to get through where the B is. And you can see the pip value on that would be from 65.56 to 63. You could get your 7 pip target to that. And if that would break, this would be the next target up here. So it looks like we also have the 62 coming down on this 15-minute chart. And this would be a significant place where it's probably going to bounce, which is right where that target is if it goes to the upside. Downside, the target seems to be nowhere in sight over here. So that means it's probably, if it breaks to the downside, it would be a lot better area. And the strength of this on the 15-minute chart, strength is the dollar is stronger than the New Zealand by a factor of 5. So with the dollar being the second currency of the pair, you'd be looking for the strength to the dollar strength would be to the downside for a short. Looking for a target on this, I'd be coming over here and I'd have to go to a 4-hour chart just to see something show up on the screen. And that comes all the way back to August 26, which is, this would be, is where the targets, where the entries are. This would be the next target over here from this candle right on that one. So I'm going to mark this, the body of this blue candle, mark that as a target. And I'm going to be looking at the wick of this candle for the demand zone. And so I'm going to clone this, move this thing down to the bottom here, and then I'm going to draw my demand zone inside this area right here. And so I'm going to take it, and so this is where, if it does break the bottom of the wedge, this is where I expect this trade to go, somewhere into this area. Go back to my 15-minute chart and see if we can tweak this up a little bit. And if it does break, we would have room. Let's see, how much room do we have to the downside on this? See, on this one, you only have 4 pips. So that would not be enough for me to take this trade short, because you're running right into some area where there were some buyers all the way from back in August. So I would not take this trade. Again, this is the time of day where it's just hard to get some really good pricing out until you get to later in the evening. But we'll still keep drawing this out and playing it out and see what happens. We'll go to the 5-minute chart. We'll tweak these prices. Actually, we'll go to just take it right to the 1 minute. So that's right here is where the lowest low before the alert, which is right here. I go to my 1-minute chart. See if we saw anybody still with us here.
Yes.
And so here's the alert. This is the lowest. This is the pivotal low before the alert. Come over here, make sure we have this in a good spot, and we'll tuck that in, tuck this one in right to that point. Come up here and check our B. We'll tuck it in over to the top of this wick. Make sure we get as much clarity and as tight of our zones as we can. We have a nice strong move down. Here's another little wedge forming right in here. You can see that this thing's just sloping on up. Came up to hit, pulled back, came up, hit again. This level right here is significant. So if this thing were to, I would be looking at this to be a secondary wedge that we talked about, Christine.
Mm-hmm.
And we're going to flatten it out. I'm going to take it down to here. We're going to take it back on up. I'd really like to take it, I'm going to bring it up over a little bit higher here so we can get a little bit more of a triangle with us. I'm going to bring this out.
A flat top?
Actually, what I'm going to do, I'm going to bring this on up and just see if we can flat top this thing.
Okay.
I'm just going to bring both of these together. Yeah, see, it's starting to come down a little bit. So right now, we don't have any place to put our C, but it's starting to develop a place right here. Now this thing could go down, and we'll see if this thing, I want to see this thing come down, break the wedge, and close below it. But right now we have another little secondary wedge forming. This is the main one. The orange one's the main one. I'm going to make this one yellow just to give us some variation so we know which one we're looking at. And you can see that it had moved down, had the alert, rejected it, came back up, retested this area right in here. And so here's a high, here's a low, here's a lower high, here's a higher low, here's a higher low still. And we're going to flat top this right into right here. And we'll see where, now we have the break of the wedge. But here again, look and see that this is the secondary wedge. This is still the primary that we're looking at. We did get a nice little pullback. The moving averages did come up, still respected the 21. And we'll see what this thing can do. Again, it's our strength is to the downside, with the dollar being the stronger of the two currencies. If we get a close below, I would say we can get a close below this A.
Now, why wouldn't you have taken a close below the
C?
Yes.
This one?
Yes.
Well, because
that had given you enough?
Well, for one, it's not really, this last move isn't really, this is still all one move. So I mean, as this thing was coming down, I still have to keep moving this thing down. So right now I've got to be looking at the initial wedge right now, because this one hasn't really, this lower from the A, we had the, in other words, like this is still all, I mean, this is a 3 1-minute candles, but we don't have the pullback. So we don't really have, like here we had a down, and then we had a pullback. This one's still coming down. We haven't had the pullback yet. Right now we have the close below the wedge. We don't have the close below, I like to have at least a couple pips on this. So if the A is at, let me just see where the A is here. Just slide this over if I can. Here's where my A, that price is at 63.37. And here's 63.37, 37. This is only, basically from here to here is only 1 pip or less.
It's nothing.
It's about 1 pip. It's about 1 pip. That's not enough to take it, especially when you know that you're looking at, now if this were during the daytime, that may be a little different story, but then you'd probably have a lot more room. Okay. That's only a 1 pip break of where the wedge is. And you figure from the wedge all the way down to here, we're looking at 6 pips.
Right.
That's a big, that looks like a big move, but it's only 6 pips wide. Mm-hmm. So I want to see at least, I'd like to see at least now we at least have the break. We have a lower, here was the lowest low before the wedge. Now we did get a lower close, but I would say right now at this point in time, if I were to get a close below inside this zone, so if let me just see if I can draw this one out. This was significant.
Al, Elias had a question. Is the RCS indicator important for scalping?
I think it's very helpful. You can, I think it's important. It's not accessible to everybody. unfortunately, at least not yet. Still working on it. We ran into some problems with TradingView to get it authorized to be able to distribute it. So we're working on that. In fact, I'm going to meet with John tomorrow about that. But yeah, it's what it does. It lets you, gives you an idea what the strength is of the move. And if you can get a nice strong spread on, especially on the 15-minute chart, if we come to these other time frames, you can see like right now we have still, the dollar is still strong on the 15. It's not as strong right now. They flipped on the 5 and they flipped on the 1 minute, and you can see this is a pretty strong rejection of this wedge right here. If you had taken it on the break of the wedge, you'd already be you would be down 5 pips already. So I mean, that was a so now if we get a test of the 62 on this 1 minute, we might get another rejection. But that's we'll just have to wait and see. Right now, it had trouble getting through this area right in here. I'd say the next push down will probably give us a little break, and then we'll be back into this zone. That and this is a fairly wide zone, so there's some room down here, but it's we'll just have to wait and see. What I want to see it, I want to see a close. I want to see it close inside this area right here. And again, I personally will not take trades this time of the night, but I'm just doing this for demonstration purposes. I'll take if I can, I'll take the trade on the demo here just to give you an idea of how this thing's going to play out. Right now, if we look and see how this thing drew out, I mean, it did break, but all this really proved here was that this C is actually now down. It actually, we have a little bit lower. It's almost like the continuation of that channel that we were talking about earlier. Let's see if I can do this. Redraw this part here. And now the question is, do we have some diversion? We may have divergence here. We have a low, we have a lower price low, but with a higher RSI. We'll see if how this thing works. And we just have to wait and see. And it's almost 10:30. We've been at this almost an hour here. And we'll see how this goes here. This was at 10 o'clock. That was a half hour into our session. You see, even like for the last from 10 o'clock to the last 20 minutes, the total range in that time was 3 pips, 4 pips, maybe 4 pips in the last 20 minutes. Normally, during the daytime, you'll get at least 3 or 4 pips on the average of every minute. 5-minute bar, I think, usually has about 5 or 6 pips per candle. This one is taking 20 minutes just to go the range of a normal candle time. So it's very, very tight. I said there just isn't enough room for me to want to take a trade with this tight of a move. Even if you get a big break, even if it says a big breakdown here, you're only looking at 3-4 pips.
With the time left, do you want to check out the other one?
That's okay. Yeah, we could do that. The US CAD.
Yeah, it's a descending wedge.
Okay. Yeah,
At 10 o'clock also.
Let's just do that. Let me just take this off here. Let me just close this
Just
out here.
fix it, maybe.
Yeah, let me just, this will give us practice of at least drawing these things, which is worthwhile.
It's better than watching paint dry.
Better than watching paint dry. That's right. That's a very good point. Okay, we're just going to take all this off. We'll take all this off here. And so this is the US CAD. And this was at 10 o'clock as well, I believe.
Yes.
And that one, let's see, that one was a descending wedge. So we're looking at starting with the A up at the top. I'm looking to see where is our pivot high and pivot low from, in this case, the new day, which is, let's see, this was yesterday's 23rd. Today's, right now it's the 23rd. We should be in the 24th.
No, yes.
Well, actually, let's be right. This is the 5 o'clock close. And this is what we've had since the, let me go on a 15-minute chart and look and see what our ranges were. Now you can see that, yes, the whole move during the day, today's day, is a strong move up. And it's really didn't, and you can see if you look at, see where a trend line is, we've got a nice little trend line going right to this area here. And we have somewhat of a channel going in the top. Let me just identify this area. Take it on up and see how many different hits we can get. And let's see if we take it, I would say take it right about like from here to here. It's maintaining this channel pretty closely. We may actually be able to, now the wedge, actually I kind of like this one a little bit better here.
Yeah.
This is a little bit where the wedge would have been like this, because it was ascending. Oh wait, that's descending. It was descending. So we're in an ascending channel, but we had a descending wedge. So the wedge alert is pretty much going to come from, I'm going to have to take it from the, oh boy, let's see. We're going to have to start it up here, bring it down to the low, pivot low, lower high, and somewhere along the way it's going to be a lower low. And that was pretty much right. We're actually in that point right now. I would be drawing it that way. Let me go to a 5-minute chart. And I'm going to tweak it in a little bit closer. I do like this little trend line. So this is our trend channel, descending wedge, very slight gradual move down. Here's our high, here's our low, here's our lower high. And somewhere along the way, we'll probably get a higher low. But if we get the break of this area, I'd be looking for a break above the C to the channel, or from the B to probably this area down here. That was the last test of the range. So this would be my target. This would be the entry to break below this. This would be to close at the entry of that. And we're going to clone this. And we put one up top here. And then the target would be up. See, the target is going to be the top of the wedge on this. We've already at the bottom of this channel. But if it breaks the channel to the downside, I'll be looking at this for a target. That would be a nice little target, I think. Let's see what the range of that is. That's 31 pips, so that's pretty good. Check and see where our Fibonacci lines are, see what kind of time frames we have. And we have basically, this should be 21 pips, I believe, in between these. From here to here should be 21 pips, and it is. Our wedge alert would happen right by the red fib line. And so we're looking at the, let's go to our 1-minute chart. Take my fib lines off. We'll spread this out a little bit. See if we can tweak this in a little bit tighter. And Nice strong move up, had the alert, just forming a little bit of a wedge in here. This is continuing with it was a descending wedge. You can see where we had here's the hit. I'll tuck this one in a little bit closer as well. Here's our hit C, and then here we have another validation of this trend line here. Let me just move this over to, because you have this gives it the validation. Now if we get the break of the C, if we get a break and close above, I like to see it close, I like to see a wick above the C and a close above the close of the C. So it's where, then I'll draw this little box here. And enter on the close. So this candle can close inside this box, prefer higher than the close of this, where this candle on the C is, higher than the close there. I prefer to see a higher price than the C. I see a wick up, come back down, close outside or inside the box, and then we can take it long. We can take as I would not be taking this in real life, but this is in demo. We'll see how it plays out if it does. So I've got a 7-pip target, and we're going to use I'm going to use a 12-pip stop on this, and we're going to do a stop, a buy stop. And so if we'll see if we can get a close inside this box here. So I got to come all the way down here to where below the bid. Or actually, no, it's got to be. It's just got to be above this cell here. Yeah, that would be blue. Okay. So we can get a close above. I'd like to see a close. If I can get a nice. This candle is about to close in 43 seconds. We'll see how this works out. If it's about 5 seconds before the close of this candle and it's inside that box, I'll set the order. It's got to be above the asking price.
There's your ask down there.
Yeah, I'm going to be looking at somewhere around the 33.89 level. 12 seconds. And I'll place that order and I'll try and tag it so that if it comes about in there, should be filled. Oh, didn't like that. Oh, I'm already filled. See, I'm already filled because of the spread. We got a 2-point spread on this. We'll see if this next candle can come up and confirm that order. If not, we'll just have to keep take ourselves out or just play the game. I'll bring my stop down to within 5 pips. I want to keep the stop. If these moving averages stay to the upside, my 62 moving average here should be a safe place to keep the stop. I said the take profit, the target is going to be pretty much where this point is, and so I'm going to move this down to pretty much right in line with. And that would give us. That's only a 5-pip move. We may not even get that. At least not for another couple hours anyway. Do we have any questions? We've been at this about an hour. Do we have any questions, comments?
I have a question.
Okay, Christine.
I know we're going for a buy, but on this same chart, okay, I was looking for your target on the downside.
On the downside? Yeah, the target to the downside, the first target to the downside Well, first we'd have to get the break of this. Well, right
Right.
off the main chart we'd be looking at, and actually we probably will be able to move it up here a little bit closer if we get these moving averages to curl out and curl over inside and make a shot for this with everything going, giving us the indication that things are going to be going short. But if we did get the break, this would probably be if we get the break, if we get the break, if we get in up in this area right here,
Mhm.
this would be my first target. The break of the wedge, uh, that's probably going to be the best thing we could do right now for the target, but that's still not going to be a whole lot. After the break of the B, we'll look and see what we can find. Let's just see if we can find, let's just see if we get a close below here to down here, that's 9 pips. So that would be my first target. If I can get it, if I end up going short, I'd like to probably try and get short somewhere up in this area below this series, below this pivot. If we can get a close below that, then I may try and take it short using the wedge and the B for my first target. After that, we're going to have to come over and see what we can find. So let's go to our 15-minute chart. And we're going to be looking to see where is this was the days, this was the last significant pivot low from, you can see from where the B is. If you draw that line from this low to here, if we get the break, there's really not a whole lot stopping it from this whole big area right here. This would
Okay.
be the origin of this move. So I would be looking at,
Because I just want to make sure because the magenta line that you're keeping it within the channel, okay?
yeah,
Because it would not be 3 touches if we would have put it. Let's see, 1, 2, 3, 4, 5, 6 blue candles above where it is presently.
uh, 6, this
Yeah.
one right here.
Yes.
So, I mean, if we did it like this candle,
Yes.
is that what you're talking about? Yeah,
Yes.
it still wouldn't make any, you still wouldn't have the third touch yet.
Okay.
Basically, we're just projecting, since this was a pivot low,
Mm-hmm.
uh, this was actually where everything kind of started, right?
Right.
Right here.
Right.
Okay. And this was so it came up, took out all of this, came back down and retested this area.
Mm-hmm.
This was the first real retest. It broke through here, came back down, retested this origin. So this is really the low. So that's why I like this one better. I like this one, but and you can see that this one is pretty close to where those are. And all that was to confirm that this was, I mean, you could argue that this would be the zone that you would be looking at for a demand zone.
Mm-hmm.
Okay. I would use that because we had a strong, here's our M. Remember our M's and
Right.
W's?
Right.
Here's our M. And then it started, then it took off. This was, once it made the M, came back up, retested this area, and then it took off. So this is still a bigger move.
Right.
So that's why I do like this for a target demand zone if it breaks to the bottom. But it has some stuff it's got to get through. It's got to get through all this stuff right here first.
Mm-hmm.
And what you see is right by the Fibonacci line.
Right.
Um,
Because I was partially why I was looking at that candle
yeah,
where you have your top dotted line was because that candle is more explosive than the one at the bottom. But I understand your merits as far as the bottom
yeah.
now.
No, I guess
You
the
explained
question would
that.
be: is there some place where we can go? Let's just put the arrow here. Is there some place over to the left that we can go to where we can use to where we can get that? This is probably about as close as I can see to get, uh, unless we were looking at going on the downside, and that might be a possibility too. Um, yeah, this would be about as close as I can see where you come down, got a rejection right here, anchor hit, third hit. Um, I don't like it that well, all in all. I like this one better just because one, it's a nice longer impulse move. And
Right.
once this is a retracement. This is the what they call it, the correction move. So here's the impulse, here's the correction. So I'd like to see, well, that's where the correction, that's as far as the correction came.
Mm-hmm.
I guess there's merit to that, actually. If this area got broken, yeah, actually, if this one got broken, there's not a whole lot to stop it till you get down to here.
Right.
So this would have to, so yeah, I would say this would be really be your first target area right here.
Mm-hmm.
I would go with, I can go with that
Mm-hmm.
in this particular case.
Right.
But actually, what's happening is it's actually breaking to the upside.
No,
So,
I know.
yeah,
I was just,
but that's,
before it broke to the upside,
yeah,
when we just did the dotted,
yeah.
it
Actually, I do kind of,
lower
yeah,
side.
I do kind of like this as far as for if it breaks the where the B is, if it breaks that, I would
Mhm,
think that I would say this has merit that now once this gets broken, now it's pretty much clear sailing. You might get a little bit of a bump right here, but
mhm,
it's going to be pretty clear sailing, at least until you get down to this line, this area right here.
mhm.
So I would put this as the demand zone. This will probably be more of a bump in the road or a
Right.
reaction point, but I would say that the stronger demand zone is going to be down here.
Right. Yeah, like the sixth one that I was talking
Yeah,
about.
yeah. So
Okay.
I would still be putting this in I use it about like
Yeah.
that and bring it on over like that, and then use this as call this my demand zone.
Okay. I mean, I
Okay.
was just wondering, like, to try to understand what your process was. So
Yeah,
that's why.
I think that you brought up a really good point though. That this is because there was a little bit of basing here. It came up, nice move up, based, and actually it's just been really slow going all the way up until it came up here, and then it just came down, and it actually retested this level,
Right.
and then it came back up again. So this area has a little bit of meat to it.
Hmm. Okay.
And you see, actually, this point is almost it's almost a straight line here. But from the overall bigger trend for the channel, this
Hmm.
would be a better fit. But as
Right.
far as for the wedge itself, this would be a good reference. And
Mhm.
maybe that would be a good thing to do. Maybe take this on over here to this one, bring this down here, and then use that for the wedge, which is out now it's basically a little bit of a descending wedge.
Yeah, it's more of a descending
And
wedge.
now if you get the break of the D, now we're looking coming down to looking at coming down to this area right in here.
Right.
Okay.
Mm-hmm. Thank you.
Yep. So, and that's about all I have to say about this tonight. So, any other questions? If not, we'll wrap it up tonight.
Darn,
Going
it's
once,
been
going
better
twice.
Q&A, so.
Okay. We're right here every morning at 8 o'clock. We'll be here tomorrow morning again at 8 o'clock. And hopefully we'll be able to get everybody to get you all have a chance to come over here and see us then.
Thank you all.
All right. Thanks for coming, everybody, and we'll talk to you later. Have a good evening.
Have a good night.